buying land, cash financing, and the basic process. Buying vacant land is different from buying a finished home. Buyers need to verify access, boundaries, utilities, zoning, HOA rules, taxes, and future use before closing. The first question is simple. Are you buying with cash or are you financing the land? Cash purchases. Cash is usually the cleanest way to buy land. Sellers like cash because there is no lender involved, which usually means fewer delays, fewer conditions, and less risk. Cash buyers may move faster and make a stronger offer, but cash does not mean skipping due diligence. Buyers still need to verify what they are buying. Financing vacant land. Land financing is different from regular home financing. There are lenders around the state that finance vacant land, but land is usually treated as a higher risk loan. There is no finished house, no immediate occupancy, and often more uncertainties around access, utilities, buildability, and future use. Because of that, land loans may come with higher interest rates, larger down payments, shorter terms, higher closing costs than expected, fewer lender options, and more review of the land itself. Land can be financed, but buyers should check financing early and understand the full cost before getting too far into the process. 1. The offer. The process starts with a written offer. The offer usually includes price, earnest money, closing date, due diligence deadlines, financing terms, if any, and special conditions. With land, the offer should give the buyer enough time to research the property. Vacant land can have issues that are not obvious from photos, maps, or a quick walkthrough. 2. Contract acceptance. Once the seller accepts the offer, the property goes under contract. The buyer then has time to review documents, inspect the property, verify financing if needed, and decide whether the land still works. 3. Title. Work. After the property is under contract, the title company starts title work. Title work verifies ownership and checks for recorded issues, including liens, unpaid taxes, easements, access matters, old ownership claims, or other recorded exceptions. In many Colorado transactions, the seller typically pays for the owner's title insurance policy, but buyers should confirm the contract. Title insurance helps protect the buyer from title problems. 4. Plat boundaries and survey. Buyers should review the plat and compare it to what they see on the ground. Check the property shape, road location, access points, fences, neighboring improvements, driveways, and visible corner markers. The plat is a good starting point, but it is not a new survey. A survey may be worth considering if boundaries are unclear, corners cannot be located, fences or driveways are close to property lines, the buyer plans to build, or there is concern about encroachments. Online maps, county GIS, and subdivision plats should not be treated as guaranteed boundary surveys. 5. HOA documents. If the property is in an HOA or property owners association, buyers should review the documents carefully. These may include covenants, bylaws, rules, architectural guidelines, road agreements, budgets, meeting minutes, and other governing documents. HOA or subdivision rules may affect camping, RV use, building size, animals, short-term rentals, road maintenance, dues, and future use. 6. Tax certificate and HOA status letter. A tax certificate is ordered to verify property taxes, tax status, and whether unpaid taxes need to be handled before closing. If there is an HOA, an HOA status letter helps confirm dues, assessment amount, transfer fees, special assessments, or outstanding balances. 7. Due diligence. Due diligence is one of the most important parts of buying land. Buyers should verify legal access, road maintenance, boundaries, zoning, building rules, HOA restrictions, camping or RV rules, power availability, utility options, well and septic feasibility, driveway access, slope, build site, easements, taxes, and restrictions. 8. Appraisal, if needed. If the buyer is financing the land, the lender may require an appraisal. The appraisal helps determine whether the property supports the loan amount. Cash buyers usually do not need one. 9. Closing. Before closing, the buyer should review the settlement statement, title commitment deed, tax prorations, HOA information, lender documents if applicable, and final contract items. At closing, the buyer signs, the seller signs the deed, funds are collected, and the title company records the deed with the county. Once recorded, the buyer officially owns the land, bottom line. cash is usually stronger and simpler. Financing can work, but buyers should expect higher rates, higher down payments, and possibly higher closing costs than a regular home loan. The best land, buyers ask the right questions and make sure the property fits the way they plan to use it. If you have questions about buying land or mountain property in Park County, reach out anytime. Every property is different and the details matter. Access, utilities, HOA rules, financing, and future use can all affect whether a property is the right fit. I'm Kevin Copeland with Jefferson Real Estate. We've been helping buyers and sellers in Park County for decades, and we'd be happy to help you understand your options. Thanks for watching, and don't forget to subscribe for more Park County real estate tips.